Going on, people? Luke here from LAGFX. We're back today with a new video. Today's video is actually going to be slightly different. What I want to do is just run over some quick tips and tricks when it comes to actually managing running positions, because I know a lot of people struggle with being able to manage their trades accordingly without letting their psychology get in the way of their decisions and the decisions that they are making when obviously managing these trades. I know a lot of times people will see price put in a corrective wave when they're in on a short or a long position, and they will allow fear or greed to get in the way of their decisions and the decisions they make. And it also clouds their thoughts, and they make decisions that they shouldn't be making. So I just want to clear a few things up. Let me just, I'm just going to get rid of these just so I can actually go through this setup. This is actually a running trade that we have open at the moment over in the VIP chat. So you can see here that price traded into a higher time frame supply zone. And what we've been delivered with is a break of structure to the downside, right? Yes, this is on the 1 minute time frames. If you know anything about LAGFX and the trades we place, we do our due diligence, we do full top-down analysis on all the markets and pairs that we look to place. And we are able to refine our entries to as low as the 1 and 5 minute time frames. This has just been done by years of practice. So as you can see, we have been delivered with a 1 minute break of structure to the downside. This here is the last protected low. Why is this the last protected low? Because this low here went on to create this high. This is the highest high within this bullish structure. So therefore, a break in this low gives us that break of structure. Now, there are two pieces of confluence right there. We have a penetration of a supply zone, which we would think would introduce enough supply to give us the S&D flip and also generate us with bearish structure. Why? Because an introduction of supply encourages price to trade us lower. And on top of that, we've had a break of structure to the downside. That suggests that these protected lows in bullish structure are no longer protected. The S&D balance has definitely flipped to the upside, to the downside, should I say. So because of all of that, we have plenty of confluence. This market is actually a bearish one on the higher time frames at the moment. So we have that to go against as well, always trading with the trend. It's a famous quote within Forex: the trend is your friend, and we should always be trading with the prevailing trend. We are also taking that into consideration with this position here. Now, when it comes to actually managing a running position, a lot of people will become quite hesitant and will become quite fearful when they see the markets putting in this bullish structure. When they see that price is trading 2-3 RR like this trade was, they'll see price put in a corrective wave and they'll fear that they are going to lose those funds. So a lot of the time people will close their position whilst price is putting in that corrective wave, and they'll actually miss out on the rest of the trade. This trade, by the looks of things, I have no doubt in my mind that it would go on, and it will go on to provide us with some amazing profits. I'm quite confident in this, and I am excited to see how this trade plays out. Now, as I say, going back to my point about controlling your emotions and the psychology involved, when price is trading up in this corrective way, a lot of people do close those positions in fear of missing out on the profits they've already made. That is the silliest thing you can do for one of two reasons. One, you could potentially miss out on a brilliant position. And secondly, you shouldn't be closing the trade just because it's correcting. For one, you are actually closing at a worse point because price is within a corrective phase. And secondly, there are other things that you can put in place to manage the position safely. One of which is taking partials. If a position is in at least 3 RR, so that's 3 times your initial risk, then taking a 50% partial will always guarantee you with some kind of return from this position, whether you move stop loss to entry or whether you leave your stop loss where it is. If you move stop loss to entry, you are going to walk away with 1.5 RR. If, however, you leave stop loss where it is, you will still walk away with 1 RR, which is whatever you're risking on the position that you've placed. So just taking a partial at 3 RR for 50% guarantees you a return regardless of the outcome of the trade. So that's one thing to keep in mind. Now, the second thing is actually moving your stop loss to entry, as that just alleviates all risk from the position straight away. Now, there are going to be times where moving stop loss to entry isn't going to be the most educated decision to make, but if you feel that fear inside growing and you feel like you want to close the position to just bank those profits, you've got to weigh up your odds. What's better? Would you rather close your position now at 1 RR, 2 RR, or would you rather move stop loss to entry, let the trade run, and it run 5, 6, 7 RR? Yes, there is a possible chance that you are going to hit stop loss at entry, but would you not much rather that, where you don't lose anything, than actually missing out on a 5, 6, 7 RR trade? I know for me personally, I would much rather move my stop loss to entry and just allow the trade to run, because then you still have that chance that price is going to actually generate you with some amazing returns, especially when you have done your due diligence, you've done your analysis, and you have multiple pieces of confluence to actually back your analysis. Now, this is a brilliant example, because if we have a look at this here, right, price was trading us in a corrective way. And I've actually already created a video for the guys in the Telegram group chat. I'm just basically redoing this video for you guys on YouTube. But what I highlighted and what I showed was actually price was trading up. And I said, if you look at this in a realistic way now on this time frames, for one, we have 2 hidden order blocks. This is the first one, and the second one is actually just up here, right? Now, these are hidden order blocks because within these wicks, there is bullish structure. Price, to create the wick in the first place, would have had to generate us with bearishness, but to create the wick for the candle close up here, there would have had to been some kind of bullish structure for price to close up there. What we've then seen is a continuation in bullishness, and then prices then tread lower, breaking and closing down at this point. So therefore, within this wick and this wick, there is bullish structure, and there is a clear order block there in price. The same goes for this one here. Now, whilst I was recording this video for the VIP clients, price had just penetrated this one, and I marked out my path and I said, look, if we are realistic about this, price has created an impulsive wave. What follows is an impulsive wave. What comes after that is another impulsive wave. Now, if we are confident in our position and we are confident in the analysis we have performed, then we understand that price has to put in a corrective wave before it continues trading in the desired direction. Now, there are no other hidden order blocks within this bearish structure or within this impulsive wave that hasn't been mitigated. So by moving my stop loss to entry, like so, we would still be in on the position and we still have the possible chance to generate some amazing profits from the trade. Now, if for any reason price trades above our entry anyway, by moving stop loss to entry, we wouldn't want to be in the position anyways, as this would disregard our analysis and price would probably go on to trade us higher. So we wouldn't want to be in on any shorts on this market anyway. And another thing to take away from this as well is if price comes up, like it has done, to set a lower high and then goes on to set a new lower low, what we are seeing is price actually setting a protected high below our entry point. So this actually acts as a protection from our stop loss at entry, or our stop loss in general, being hit. So by allowing the markets to do their thing and allowing the markets to put in the structure we desire, you will notice a massive difference from the profits you are seeing in the markets. As long as you're waiting for the right point to actually execute your positions, you have enough confluence, you have enough confirmation to actually enter in on the markets, then there should be no reason as to why you should be closing a position early, as these trades are always going to be the ones that run really well. You can see now that this trade is actually playing out just as I expected, and what I'm actually going to do is throw in a quick snippet of the video I've sent into the VIP chat, into the Telegram group chat to the guys before this has actually played out, and I was actually predicting this exact thing to happen, and this is exactly what we're seeing. Now, when we see price put in this corrective wave like this, what we need to have a look at is if there's any areas that have been left unmitigated and any areas that price may want to trade up and into before continuing to trade us lower in this market. Because we've got to remember that with every impulse comes a corrective wave. So when we see things like this, it's important that we do just stay calm, collective, and we allow the markets to do their thing. Because best believe if price was to trade us down like it has done, trade us up now and into a fractal supply zone and then trades us lower, as soon as this low here has broken, that would mean that this here is now the next protected high. That's a brilliant thing for us because it's below our entry point, which means that our entry is now safe via this protected high, right? You can see here that price has wicked down and then price has wicked up. This is actually a hidden order block. And again, we have the same here. Price wicks down, price then wicks up. So within these two areas in price are hidden order blocks, places that price could come back up to clear before trading goes lower in the markets. What we are seeing now is price actually trade up and into both of these. We've seen price trade into this one, and we are seeing rejection to the downside. This may encourage a fractal corrective wave. Price may introduce supply, which puts in a fractal correction before then trades us up into this one, and then that might be the one that gives us that full S&D flip to the downside. Now if we just get our path and we draw this, you can see that we have an impulse, correction, impulse, right? Now on top of all of that, you can see now that if price does go on to create a new lower low, this would actually be the last protected high within this bearish structure. And what we need to take away from that is the fact that we have a protected high below our entry is a brilliant thing. This is because this means in order for price to trade up and into our entry point or hit our stop loss, it would need to break a protected high, and therefore we wouldn't want to be in the position anyway, because as we know, in bearish structure we protect the highs and we break the lows. So if price was to break a high like this, that would be a break of structure to the upside, and that would suggest that price is now ready to actually go on to put in bullish structure. We would therefore look to close our position anyways. Another thing we can actually integrate with all of this is trailing our stop loss. So we could now move our stop loss just above this high here. Why? Because we don't want to be on the position anyway. If price comes to trade above that, that would be a break in structure, and that would suggest bullishness longer term. But yeah, I just wanted to kind of highlight managing trades. It's going to be a pretty quick and brief video, but I just wanted to cover this, especially whilst we had a running trade open. What I'm going to do is I'm going to send out the message that I sent out to the clients, just so you can see this is a live and running trade. And I'll also add that snippet from the video that I sent to them as well, just to tell them to take it easy and control their psychology, because psychology is a massive thing with Forex. You can be the best trader in the world, but the second you see price correct itself like that, you're wanting to get up and out of the market, and that's the worst thing you could have done. I know loads of people, I have clients personally that may have closed positions somewhere around here, and now when you look, price is actually breaking the last low. This tells us that actually this bearishness is here to stay. Now, if you guys have any questions regarding this, please leave them in the comments below. And if you want to see me go over any kind of part of Forex that I've not covered before, then please leave the suggestions in the comments. I'm more than happy to make videos based on things people are unsure about. Hidden order blocks is not something I've actually covered as a topic, so I will be looking to do that. But yeah, as I say, if there's anything you guys are still unsure about, or there's anything you want me to go over, please leave it in the comments below, and I'll be sure to create that content. If you have enjoyed this video, and this video has given you some kind of reassurance, then please leave it a thumbs up. Just remember, if you have placed a position, and you have used the correct risk management, you have waited for enough confluence and confirmation to execute the trade, then you should have full confidence in the position that you've placed. When you see price put in a corrective wave, if fear is really taken over on the decisions you are making, either step away from the position or move your stop loss to entry and just allow the trade to run. It is much better to allow the trade to run and potentially gain an exponential amount from the position you've placed, rather than closing early in fear that the price is going to hit your stop loss. Now, thank you guys for watching, and we'll catch you all in the next one.